but as of last year, we decided to, or 2 years ago, we decided to do our own Kenyan version of the report, and this is the second installment in that report. So our sample size includes private bankers, wealth managers, and family offices, over a dozen of them within the Kenyan market, and globally, we have more than 200 that take part in the sample. The majority of the firms we surveyed and worked with manage between 51 and 100 clients, high net worth individual clients, and 72% of them have more than 50 clients, and 11 manage over 500 clients that have more than $1 million in net worth. Don't discount the small firms with smaller numbers of clients, because some of these are boutique firms with large net worth clients. So how big in terms of monetary terms are these portfolios? 27% of these portfolios are less than $5 million, which is 645 million shillings. However, 73% are larger than $5 million, with 40% being bigger than $50 million, well, 38.9% being bigger than $50 million portfolios, which is 6.5 billion shillings. And finally, at the very top of the sharp end of the spear, we've got 5.5% of these portfolios have more than $1 billion, which is about 130 billion shillings of assets in them. A high net worth individual, as I mentioned earlier, is somebody with a net worth of more than $1 million, and an ultra high net worth individual is considered somebody with more than $30 million in net worth. We saw a slight fall, 2024, 2025, in terms of the total number of individuals with a net worth of more than $1 million. We saw about a 10% fall. However, 61% of our respondents said they saw less than a 10% growth in high net worth individuals. 17 said they saw a growth of between 10 and 20%, and none saw more than 70% growth in their high net worth clientele. So a slight slowdown in the number of high net worth individuals. How is their wealth expected to change in 2025? What's interesting here is we expect almost 50% of clients' wealth to increase marginally in 2025, which is slightly more optimistic than we saw in 2024. 2024, we expected to see significant growth of more than we expect to see in 2025, and that's the only exception. So no one expects to see a significant decline in 2025 in their clients' wealth, versus 6% who expected to see a significant decline in their clients' wealth in 2024. So ultimately, that's quite good news. This continues the slowdown we saw in 2024, but indicates a little bit more confidence in portfolios and, I guess, the market in general in Kenya. As with other metrics we've seen thus far, we're also seeing a bit of a slowdown in secondary passports and people looking to get secondary passports. 10% of the people surveyed say their clients are looking for a secondary passport this year, which is actually pretty much in line with last year. This indicates a bit of a domestic focus among the wealthy to ensure returns, as well as confidence in the markets. There's a bit of a silver lining to this information in terms of confidence to the market, because in reality, tough markets mean that people stay close to home and look after their assets rather than venturing abroad. Globally, markets are uncertain, so there needs to be attention paid to the local assets. So, moving on to the commercial real estate trends among these wealthy. Less than 10% invested in commercial real estate in 2024, which continues the trend we saw in 2023. A lot of these wealthy investors are looking at what's happening in certain asset classes, particularly retail and office, the contraction in returns there, as well as moving away from conventional real estate investments towards less traditional, less core assets, which Boniface will touch upon as well. In 2025, we're also expecting to see more investors looking at alternative asset classes and a continuation of this small investment in commercial real estate. In 2025, we're expecting, like we said, to see investors spend about 10% of investors spend on commercial. Looking at the results and producing this report, and the reason it's a little bit later this year is we're starting to look already at how we can formulate and what kind of information will be interesting for next year, and what kind of parallels we can draw and things we can add in. So I think that's definitely a follow-on question is, what sectors are your high net worth individuals coming from, right? Are they real estate moguls? Are they tech entrepreneurs? Are they international money that have come into the market? Because this isn't a biased in terms of nationalities. There's a lot of confidentiality around who these people are, but if they're a resident here and they have money here, they might not necessarily even be Kenyan nationals. So that's definitely something we'll build in.
We also asked the portion of our high net worth individuals' wealth which is located outside the country, and only 10% possess their residential property outside the country. And we feel this is a continuation of the continued confidence that we have in the country. And then the next question is, we wanted to know how many homes do our ultra high net worth individuals own? And from the graph, you can see that majority of them do own 3 homes, followed by 2 homes, and only 6% do own a single home. So most high net worth individuals have 3 homes. The first home usually is a primary residence in an urban center, either in Nairobi or Kisumu or Mombasa. The second home is usually a rural home, which is used for leisure or retreat. Then the third home is usually for rental income or capital appreciation. Then the next question is, we wanted to know how many of our ultra net worth individuals bought homes last year vis-a-vis the projections to buy homes this year. So from the findings, only less than 10% of the interviewed individuals bought homes last year. And then when we asked them about their possibility of buying homes this year, again, only 10% say that they plan to buy homes this year. We feel that this rather slow pace of buying homes is attributed to a number of factors, some which may include the low mortgage penetration in the country. We also feel that the rising land and construction costs could be a factor that somehow scares people away from buying homes. And then we have domestic and global concerns. We all know the issues to do with taxes and what have you, which probably are scaring people away from buying homes. We also wanted to know how many of the wealthy individuals use their second homes as an income generation facility. And from the findings, only 22% of the clients indicated that they use their second homes for income generation. Moving on. Now, we wanted to know, among the net worth individuals who we interviewed, if they were to buy a new home, where would they buy these homes? Majority indicated that they will buy these homes in Kenya. Again, domestic confidence continues to be a factor that we continue to see throughout the findings. And some also say that they will prefer to buy their homes in the US, in the UK. The next question, we wanted to understand the main motivation behind our clients' future home purchases. And from the findings, we see that investment is a major factor for future home purchases, as you can see on the graph, followed by lifestyle, education, and job relocation. So this underscores a strategic shift among the high net worth individuals who increasingly now view residential real estate as both a lifestyle asset and a reliable source of income. The next section is about farmland and environmental social governance. And the first question we wanted to know in this segment is which of the following options is a good reason to invest in farmland? So majority indicated that food production is sort of the main reason why they invest in farmland investments. And this highlights the key role that agriculture continues to play in Kenya's economy, and also underscores concerns about food security in the country. As the country's population continues to grow, so does the demand for food, making agricultural investment a key priority for the high net worth individuals. The next section is about investments and inheritance. And we wanted to know, just like last year, which among these options were the popular investments of passion. And just like last year, as I mentioned, art continues to lead among the popular investments of passion at 72%, followed by classic cars at 50%. So there are a number of reasons why we feel art continues to be the priority for passion investments. One of them being the uniqueness of the African and the Kenyan art as a whole compared to other form of art. We also do have the fact that some have cultural significance, so we feel those are some of the reasons why people tend to invest more in art compared to other passions investments. The next question, we wanted to also understand some of the reasons why the wealthy individuals keep investments of passion. And the top priority, as you can see on the screen, is the joy of ownership. Majority keep these investments, basically to keep them as a form of joy. Other reasons, as an investment at 21%, some also say it to belong to a certain group or a community of people. Like you've seen groups of people who own a specific model of cars. We also do have status among peers as another reason why people keep passion investments. And then the next question, we also wanted to understand the issue to do with inheritance wealth. We wanted to know if the high-net-worth individuals do start from scratch or they inherit most of their wealth. And from the findings, majority of the interview respondents indicated that 30 to 40% of their wealth are from inheritance. So you can see on the graph, interestingly, none of the interview individuals indicated that more than 70% of their wealth were inherited. What does this mean? It means that though many of the individuals start from somewhere, the inherited wealth, but we also have a good portion of people who start from the scratch, who will have nothing to inherit. They build their wealth basically from scratch. That's what this shows.